Hello and a warm welcome to Money Mind. On the program, the United States welcomes a new president. How will Joe Biden face the massive economic challenges ahead and deal with a pandemic that is still raging out of control? In his first major policy announcement, Mr. Biden has unveiled a $1.9 trillion rescue package for the U.S. economy. The stimulus proposal includes funds for COVID-19 vaccination and response measures. There'll also be some $1 trillion in direct relief to households. Donald Trump has become the first president in U.S. history to be impeached twice. 10 Republicans joined Democrats in the House of Representatives to charge him with inciting the attack on Capitol Hill. It's been another week of huge swings in the value of Bitcoin. The largest cryptocurrency hit a record of almost 42,000 US dollars before tumbling about 20%. Its value then climbed again. Singapore Airlines has raised 500 million US dollars in its first US dollar bond issue. SIA said the issuance was oversubscribed, with the final demand at more than 2.85 billion US dollars. The funds will be used to buy new aircraft. Singapore says there have been no disruptions to supply chains with Malaysia, following further steps across the causeway to curb the spread of COVID-19. According to Singapore Trade and Industry Minister Chan Chun Sing, the two sides are committed to working closely together to maintain the integrity of bilateral supply lines. January 20th is Inauguration Day in the United States, when the country will put in place a new U.S. president. What will be the challenges for President-elect Joe Biden, and what can businesses in Asia expect from a Biden administration? To discuss this with me today, I have with me on the Money Mind Exchange a very special panel. They are Stephen B. Kamin. He is former senior official at the U.S. Federal Reserve and resident scholar at the American Enterprise Institute. John Woods, he's Chief Investment Officer, Asia Pacific for Credit Suisse. Tommy Sier, economist and head of Greater China Research at OCBC Bank. And joining me in person today, Steve Okun. He's senior advisor at McClarty Associates. Welcome, everyone. Welcome, gentlemen. Thank you for being here with me today. Steve, let me start off with you. The Democrats have pulled off this trifecta. On day one, Joe Biden begins with arguably a strong mandate. What does it mean? What's the significance of this?
Well, the significance that the Democrats won the Senate in Georgia makes it as consequential a Senate election as we've ever had in the history of the United States. Joe Biden now has the ability to appoint 1,200 people who require Senate confirmation into his administration without any Republican votes. So you are now going to see appointees up and down the chain who are going to be much stronger on the environment from a Democratic perspective, much stronger on racial justice from a Democratic perspective. So it is going to make his administration more effective from a Democratic perspective. It means legislation is going to get through the Congress that can be done without any Republican votes. This is going to have a major impact on the stimulus. It's going to have a major impact on the environment. It's going to have a major impact on the infrastructure. It's going to have a major impact on taxes.
Stephen, COVID-19 has exacted a huge price on the U.S. economy. We have seen some recovery, but it's been patchy. It's been divided in parts. So how does he actually get the economy humming again? What's it going to look like for investors?
First and most importantly, the Biden administration is going to have to accelerate the vaccination process, because if they can't get the population vaccinated, we're not going to see that rebound. Secondly, they are going to be following through with more fiscal stimulus, and that is going to be critical. So the $900 billion package that already got passed by Congress includes $600 in stimulus checks for most people. And the Biden administration is going to seek to follow that up with another package that'll top that up to $2,000. Third, I expect White House economic policy making to be a lot less chaotic and capricious than it's been the last 4 years, and that's certainly going to help. And finally, while this is not up to the White House, obviously the accommodative monetary policy of the Fed is going to be critical here.
John, when we saw the scenes of protesters sieging the Capitol some days ago, it shocked the world. It shocked Americans specifically. But Wall Street seemed not to register what had happened. Is Wall Street now pro a Biden administration and the potential that it can achieve, even under these pandemic conditions?
Well, I think the market has looked through the geopolitical instability and focused instead on the potential for economic reflation. As we've heard, the ability of the Democrat government now to execute and deliver on various fiscal stimulus packages is much enhanced through its control of both houses. And of course, this is precisely why the market has focused on the upsides to growth from a market, from a sector, and from an interest rates and bond yield perspective. Closer to home, here in Asia, the market is looking quite closely at the potential change in complexion in relations between the United States and China. The idea is that it would be more open to engagement, a more consistent, a more predictable policy approach, which is being seen as a positive. So there's a certain amount of wait and see involved, but what's good for the United States tends to be good for Asia, and we're seeing that right now, of course, in the performance of our markets.
So Tommy, I want to get your take on this because Southeast Asian governments have wanted the Biden administration to perhaps adopt this less confrontational stance towards China and perhaps achieve a significant lowering of tensions. What does a Biden administration have to do in order to achieve that, though?
I think a less confrontational stance is good for the region. Just now, as mentioned by John, I think the Biden administration is able to be more predictable, right? I think that's probably the key words that region really needs, for the market, for the growth. So I think what's important seems like in his first 100 days, I think for Biden, maybe by doing nothing is kind of the relief for China from that perspective, because in the past few months, has been very intense measures coming from the Trump administrations. But of course, looking beyond his first 100 days, I think in the longer run, what's important for a lot of people in China is I think they will watch out the two areas, how the Biden is going to deal with China, in particular, in terms of how he is going to observe China's core national interests, which including the stability as well as the sovereignty, right? I think that's something I think a lot of people is going to pay attention to, in particular, whether Biden is going to observe China's concern over the issues like in Taiwan or maybe in Hong Kong or even in Xinjiang.
And we're going to take a little more of a deeper dive into that relationship in the next part of our program, but we do have to go for a break right now. Stay with us on the Money Mind Exchange. Welcome back to this special edition of the Money Mind Exchange Forum, where we're talking about the inauguration of Joe Biden, what it's going to mean for Asia investors and businesses. Steve, are parts of Asia going to miss Donald Trump's tough stance as far as China is concerned?
I don't think so, because Donald Trump has been tough on China, but he hasn't been effective. Now, you look from a United States perspective, what's gone forward during the Trump years. The Trans-Pacific Partnership went forward without the United States. The Regional Comprehensive Economic Partnership went forward without the United States. The EU and China have signed a trade agreement without the United States. So what has happened is the United States has been left out of these deals, and you've had no address of the core issues in China by the Chinese government. So what the Biden administration wants to do is become tough but effective. Their method of being effective is working multilaterally. It is why when the Biden administration's incoming team was asked, will you take down tariffs on China? They said, first we have to talk to our allies. We need to get a coordinated approach against China.
And Stephen, with regards that fine sort of line that the United States has to tread in its relationship with China, and vice versa, frankly, is there bipartisan consensus?
I think the short answer to that is we're not sure whether that consensus actually exists or not. First of all, the general U.S. political mood on both sides of the aisle in Congress and throughout the country toward China is considerably darker than it was several years ago. And that kind of like limits some of the possibilities that the Biden administration has in terms of its room for maneuver. Another important issue to keep in mind is that while Biden used to be more supportive of free trade, US attitudes, again, both in Democrats, Republicans, and around the country toward trade and globalization have hardened in recent years. And that also is going to make it a little more difficult than it has been to kind of like work out a good arrangement in terms of trade and other international economic issues. And the final point to keep in mind is that, just leaving the politics part aside, there's a host of really difficult economic issues, okay, that are going to be difficult to confront and are going to divide policymakers in terms of how to confront them. So I think it's certainly true, as Steve has suggested, that the Biden administration is going to try to take a more muscular approach toward dealing with those issues than the Obama administration did, and less confrontational than the Trump administration.
Well, one of the key ideas behind the Trans-Pacific Partnership, when it was conceived of really by the United States, was to hold China back in terms of technology transfer, as an example. Now it's the CPTPP. Is there any chance, Tommy, that Joe Biden could revisit the idea of joining the CPTPP now?
Basically, I think it makes sense for US to reconsider to join the CPTPP. I think that's basically is also one of the area I think you can push on China, continue to let China to comply with the international order, such as just now you mentioned about the technology transfer. I think the technology transfer will be a very important issues between the US and the China relationship, not only between the US and China, and also between the China and the rest of the world, such as the EU. I think that's why I think China has been signing the deal with the EU in terms of the investment treaty. I think the Biden administration could be also one of the catalysts to expedite the China's signing of the agreement between the China and the EU. That's why I think it makes sense, for China to further commit to this technology transfer issues, because it's also good for the Chinese company in the longer run. You can't really expect, other people to respect your technology if you don't really respect other people's technology.
Well, to be clear, there are businesses, big and small, United States businesses, which are based here in the Asia Pacific, based in China as well. In Singapore alone, we have thousands of US companies here who will be looking very keenly to see what kind of outreach the United States is going to have going forward. John, give me your take on just what investors are hoping to see in terms of that engagement.
I'm looking at disinvestment flows right now from China back to Taiwan, back to South Korea and Japan, for example. And I think perhaps a lesser appreciated effect of the Trump administration has been perhaps not to kickstart that disinvestment and that reshoring, but certainly to accelerate it. So I think that the market and investors, as you point out, will be very much focused on the likely implications of this trend. Will reshoring continue? And what is the likely impact on that around the Asia region? Are there losers? Are there winners from these flows? We are all very aware of the impact of reinvestment trends, for example, up and down Southeast Asia, and perhaps an extent into the Pacific as well. But I think investors are going to be looking very closely at the spheres of influence that might become more apparent as a consequence of this structural change in relations between the United States and China. I don't think you're going to put the genie back in the bottle. I don't think there's any likelihood of a reversion to the type of engagement we saw between the Obama and China administration.
And very quickly, Steve, is it a foregone conclusion then that the United States is going to play this diminished role, perhaps in Asia Pacific and specifically here in Southeast Asia, do you think?
I don't think it's going to be whether the US or China comes out on top in Southeast Asia. What you're seeing is more agency in Southeast Asia. You saw RCEP, which was led by ASEAN, go forward. You saw the TPP continue without the United States, in which Singapore and Vietnam were a large part of, in addition with Japan and Australia. I think you're going to see a lot more action within Southeast Asia, led by Southeast Asia, because you don't know what's going to happen 4 years from now after the Biden administration leaves. Are we going to have a Trump 2 or a Trump-like administration come in? You're not going to see China lead liberalization and reform on trade in Asia. So you're going to see it come from within Asia. I think that's the dynamic we've started to see over the last couple of years, and that is only going to speed up.
And certainly with conversations about 2024 already beginning, that's top of the mind as well. We have to go for a quick break right now. Stay with us for more on the Money Mind Exchange. Welcome back to the Money Mind Exchange panel, where we're discussing the economic challenges that face the new Biden administration. And John, I'd like to start off with you. What does the team that Joe Biden has assembled in terms of the economics of the country, what does it tell you about the direction that the United States might take with regards to Asia Pacific?
Well, we are looking at individuals such as Secretary of State Antony Blinken closely. We are looking at the Trade Representative Catherine Tai closely. And indeed, we are focused also on Brian McKeown, etc. These individuals who seem to be multilateral in their mindset, but also somewhat interventionist as well, meaning that they are not averse to becoming a little more involved in particular either economic or even political events should it be required. Overall, I think the market is anticipating a higher level of engagement.
Tommy, earlier you spoke about the focus of Joe Biden perhaps being this multilateralism. Let me just ask you to predict for us as well about this competitive coexistence, this hope for that with China. Which sectors do you think we should be focusing on?
Let's put the ideology difference aside. Let's put all those competitiveness aside. There are quite a lot of common ground can be shared by both Xi Jinping and Joe Biden, right? I mean, for example, President Xi from China, he has always mentioned, the clear water, green mountain are the invaluable assets. I think both leaders are sharing the concern about the climate change, sharing the importance about the environmental protection. I think both China and the US can really work on that particular area. In terms of the sectors, what we can pay attention to, definitely, I mean, the new energy, renewable energy, I think those are definitely the sectors we can really pay attention to in the longer run. So other than the new energy sectors, I think we will also pay attention to like the medical sectors as well as the consumer related sectors.
Let me ask Stephen this question. The demise of the greenback has been speculated on for years in terms of its dominance as a global currency. China has had this light speed recovery in its economy during this pandemic. And again, this debate has reignited once again. What happens to the dollar this year, do you think? How much longer can its dominance in global markets prevail?
Let me start by saying that there's been an awful lot of talk about the abrupt and precipitous decline in the dollar this year. But a lot of that judgment, frankly, is exaggerated in the sense that the dollar has fallen a great deal, like 9% against the euro. And so the DXY index, which is very euro-oriented, has fallen a great deal. But if you look at the overall broad dollar, which is, which the Fed calculates against the full range of US trading partners, that's actually only down 3 or 4% from the beginning of 2020. That combines a larger decline against advanced economies with almost no change at all against the currencies of emerging markets. So some of this decline has been exaggerated. In terms of the future, I think we're going to see two kind of like warring possibilities. On the one hand, if the pandemic is vanquished and the economies recover as expected, I actually expect the US economy to rebound faster than that of other advanced economies, and that should be dollar positive. On the other hand, if the pandemic is vanquished and the global economy rebounds, that should reduce risk aversion, and since the dollar is a flight to safety currency, that should lower the dollar.
All right, let's conclude now with perhaps your final thoughts on what we're going to see going forward with this Biden administration and economic engagement with this part of the world. Steve, let's begin with you.
I think it best said by Jake Sullivan, who's one of President-elect Biden's most influential advisors. He said, look, our goal as the United States cannot be to slow China down. Our goal has to be to run faster ourselves. How are we going to do that? We're going to do that by investing in our own economy. We're going to invest in infrastructure. We're going to invest in green technologies. And of course, first and foremost, we have to get past the pandemic. We have to address it and get it solved as best we can and move forward. So I think that's the real strategy for the Biden administration, and that is going to have benefits here in Asia, and add that on to the multilateral approach, and you're going to see a much different United States internally and externally that hopefully will lead to a better 2021 than we had in 2020.
John, your thoughts?
I think there's going to be a more unified, more joined up approach to China by the United States and its allies. I have the own personal view that it's actually likely to be quite effective. I think as a consequence, investment themes are going to become more domestic in focus. And in particular, we've highlighted the importance of the carbon transition in the Chinese economy as being a key way to both express this inward focus and, of course, the huge potential in this multi-decadal investment theme.
Stephen?
I think Biden administration faces a range of very critical and difficult issues, but it's putting the right people in place to deal with them. And its attitude toward a multilateral approach to China is very positive. And in that sense, I am optimistic. At the same time, I can't help but believe that the social and economic and political and global goals of the Biden administration and the Xi government are very different and in many ways conflicting. So I actually do not see an easy resolution to these problems, but I do hope that some progress will be made.
And Tommy, are you optimistic about what you will see, what we will all see going forward with this Biden administration?
Yeah, I mean, as a Chinese saying, what cannot kill you make you stronger. So as you can see, in the past few years, China has emerged quite strongly from the trade war as well as the pandemic, right? So, but I think one thing quite sure, China will not be inward looking. So I think China will remain engaged with the Biden administration.
All right, gentlemen, thank you very much for sharing your perspectives and your time with me today. I've been speaking to Stephen Kamin there, John Woods, Tommy Sear, and Steve Okun. Thank you very much. That's it for this edition of the Money Mind Exchange. Bye for now.